One of the most important reasons that people lose money while investing, it's not because you're picking the wrong projects or the wrong stock, the wrong crypto. It's because of your entry position. Okay, today I'm going to explain some of this. It's one of the biggest skills that I've learned is how to identify support and resistance. It's very simple stuff. It takes a little bit of practice, but once you see it, you will have a better idea. Okay? If you ever bought something and you immediately watch it drop or sold it before it went in the correct direction that you want, chances are you ignoring the support and resistance levels, because every chart in equities or crypto or anything, it has certain movements between these support and resistance lines. The good news, it's not complicated. Okay, everybody? You don't need these fancy indicators. There's crazy. You get on tradingview.com, you get on the indicators, there's hundreds of them, literally. Don't get yourself confused with this. As you're getting into investing, identify support and resistance. That's what I'm going to teach you today. Okay, let's start with support. Here is the definition of what is support. Let me just read it to you real quick. Support is a price level where buying pressure has historically been strong enough to stop price from falling further. Got it. That's support. Now, in other words, support equals an area where buyers tend to step in and slow or stop the decline. Remember, everything's about the money. We follow the money, the money movement. Okay, now, I'm just going to show you in this chart real quick. Let's come over here. And it doesn't matter what crypto or stock you're looking at. It's just a chart. Now, I just happen to have Solana up because it was a clear slate that I was able to, delete or let's say remove all of the lines that I had. Because if you just look at all the crap I had drawn on here, it was confusing. Okay, and so I'm using tradingview.com. There's tons of different charting services out there. Now, if you get on Coinbase or something like that and you look at the chart, it's just a line graph, which is okay because you can see the price movements. And you could still do this, but I prefer to use candles when I'm looking at this. And let me explain real quick what a candle is. Okay, and I'm going to go over to the end right here. If you can see my cursor, when there's a red candle, the top of the candle is the price that it opens at. The bottom of the body right here is the price that it closes at. Now, you can see there's little wicks that shoot up and down. That's the high or the low of the day. So, for example, this bottom wick is the low of the day. That top wick, it's a tiny wick at the top, is the high of the day. Let's move over to, this is actually today. When a candle is green, that means it opens at a price above the close of the previous day. And this one it's kind of hard to see, but it's very subtle. Today we opened right here at a price where my cursor is above the close of yesterday. As we speak, we are currently trading right here. Now, at the end of the trading day, these are 24-hour candles, which close at 4 o'clock Pacific. So at 4 o'clock Pacific today, if this price is above the opening price right here, it is going to remain green when it closes. And again, the wick is the high price that it shot up to on the bottom and the top. Let's go over here and get back on what our support and resistance means. Now, as I look at this chart, all I'm doing is I'm looking for a price. I go back, like this is back, let's see, December. December starts right here, and then we're over to the current day. Okay, so this is about a 2-month period or so. I try to look at and find some type of support. So on TradingView, I come over here and I'm going to use a horizontal line. So I click horizontal line. And so as I move my cursor, I'm just looking for a point at which the price seemed to have bounced off of, okay, in either direction. Now right here, look at this. And I try to find, at least 3 bodies of a candle. The more the better. 4, 5, 6, 7. The more bodies that bounce off this line creates a stronger support level. Okay, that's the bottom. Now, right here, as I put this cursor here, I start in the beginning, okay, over on this side, over here, I'm looking at, so 1, 2, 3, 4, about a 5 or a 6 bodies of the candle hit this price. This is not an exact science, everybody, okay? So right at about 118.50. Okay, let's see if I can get it on. Okay, we'll go 118. I'm going to scoot up a little more because if you look over here, it hits these 2 bodies, but I look across, it didn't quite hit the body. Some people do it on the wicks to find the support. And sometimes when the wick touches and it goes, it can count. But I like using the bottom of the body of the candle. So 118. I scooted up just a little bit. I'm gonna use 118. Let's say 119. The reason why I use 119 and I clicked it and made a horizontal line because right here it was a little closer to the body. I went into the body just a bit right here. Like I said, it's not an exact science. I like around 119. It's kind of a psychological level. So we're going to use 119 to identify the support on this chart. Because it hit 1, 2, 3, 4, 5, 6 different candles, bodies, did something, okay, on that particular level. If I zoom out, let's go back and look. Does this line hit any other candles back here? Ooh, right here. Okay, I'm not going to get too crazy with it, but if I zoom in, it looks like it hit a couple other bodies right in this area. Okay, but that's back in April. Okay, like I said, you can go as far back as you want, but I like to just look a couple months back because we're doing more of a short-term support and resistance to determine an entry price on when to get into this project. Okay, next, what is resistance? I'm going to read you the definition of what is resistance. Now, resistance is a price level where selling pressure has historically been strong enough to stop price from rising further. Okay, the short answer to resistance is resistance equals an area where sellers tend to step in and slow or stop a rally. It's that simple. Let's go back to our chart. Find a horizontal line right here. Okay, so I see something at the top right here. I see a level around 147 where 2 candles hit. 2 candles hit over here. I take my eye back a little bit. Ooh, there's a couple more candles right here. But they're higher. It's just the wick. So I'm going to come down just a hair to keep it kind of conservative. I'm going to keep it on 147. Okay, 147 looks like a resistance line to me. I'm going to click it. Bingo. People, look at this range right here. This is a sideways range where this price action seemed to bounce off this bottom, work its way back up to about 147. So if I'm looking to buy Solana recently or right now, a good buying or entry price is around this 119. Now, as you see, we're looking at a good green candle right here that bounced off this 119 and is heading up. So I don't like to try to get exact bottom and exact top. Full disclosure, people, I did this on the Ethereum chart, and I bought some Ethereum today because it's below 3,000 with a green candle that's very similar to this. But I decided that, hey, I think it's moving towards the resistance level, so I bought some. And it's a dollar cost average for me, just when I allocate my funds for my personal portfolio. This is not financial advice, ladies and gentlemen. This is just defining support and resistance, and I'm giving you some personal experience here. This could be anywhere around this bottom half of this range could be a time for a good entry price on any crypto or any stock. This is a technical term, finding support and resistance. Now, okay, let's go over here. You do not need indicators like the Fibonacci, the dozens of other indicators or perfect lines. You don't need all that. The Fibonacci can be confusing when you try to look at the percentages on that thing. Don't even go there yet. Okay? All I'm doing here is asking the question to myself, where did price react strongly in the past? Okay, and that's we're going, like I said, we're going back a couple months here. Okay, now important things to think about. If price breaks resistance, that old resistance often becomes new support. I'll say it again. If the price breaks resistance, that old resistance often becomes support. Let's go back and see if this is true on this chart. So I'm looking at the top. Same is true the other way around. See how our top line is resistance? Well, guess what? Back here, back in November, this top line was acting like support. You see where it bounced off of this? I'm going to see, yeah, right here, people. Right here, it bounced off and went up. Bounced off and went up. Over here, bounced off and went up. Look what happened when this red candle broke below the resistance right here. It broke below the resistance. What did it do? It turned into a resistance line. Right here, it was support. Right here, when it bounced off this support, I said resistance because we're calling it resistance line over here. Prior to December, this was acting as a support line right here, and it would bounce up. As soon as it crossed over that support line, look what happened. The price action moved down to find a new support, which is our 119. We came back up to our 147, and it bounced off. Came back up to 147, bounced off. Down to our support line, it bounced up. Okay, we put it at 119. So again, this is not an exact science, but once you start to see these different levels, all this is doing is it's helping us to determine what might be a good entry position or entry price for us to get into. Okay, not an exact science, but it's the beginning of your technical analysis journey. And look, some very savvy expert investors just use this simple support and resistance to find their prices, because if you're working on more of a long-term situation, it just makes sense to find good entry prices. Okay, that's all. So common mistakes that go on here. Okay, number one, and here's a mistake. When you're drawing support and resistance on a chart and you're just kind of randomly clicking everywhere to try to make it up, that's a mistake. You got to see at least, I would say, 2 to 5 spots that hit that line. Okay, just don't sit there and randomly draw lines that look good. You got to make sure it is an actual level. Okay, mistake number 2. buying in the middle of this range, when buying in the middle around here somewhere, you don't know which way it's going to go. You want to have that middle line across here to determine, okay, I'm going to try to buy below that middle level range. Or if you're selling short, okay, it's the opposite. Won't confuse you with that though. So right here, I went in and bought Ethereum that looked very similar to this, because it bounced off and it was doing the same thing, but it was still below that middle line. It's a good entry point. Because you look at the longer term chart, when you zoom out, it can tell you some more stuff from there. Okay. Now, mistake number 3. Ignoring the higher time frames. Okay. The weekly and daily levels matter more than the 5-minute noise. Okay, I didn't explain that in the beginning, but I don't use, day traders use like the 1-minute candles and the 5-minute candles that are just bouncing everywhere, which is okay. I mean, that's what they do. Zoom out. Use the 24-hour candles. I'm telling you, people, when I started to understand that, because I was doing the day trading thing, it's so stressful. It's insane. The price is just moving around, make your head spin. Zoom out. Use the daily 24-hour candles, because one of these things posts every day. So all the noise in between, it kind of doesn't matter, because we have an opening price and a closing price. That's what these daily candles show us here. So now, how I use this personally, okay, I'm not giving you financial advice today, just sharing my process. I use support and resistance to avoid chasing the pumps, which is called FOMO, that we don't even want to be a part of that. It helps me be patient during pullbacks and understand when price is overextended. Okay, this works whether you're trading, investing, or just trying to not panic. So it's very important stuff for us right here. Okay, now right now, I'm in markets, in certain markets like this one, when emotions run high, support and resistance act like our guardians, ladies and gentlemen. This is kind of our protection, because we have kind of an inside insight on what price actions make sense here. Okay, this helps you to slow down and make decisions instead of reacting to things. Now, in the next lesson, I'm going to show you how I combine support and resistance with market dominance and momentum. Ooh, very important. Okay. That's what we're talking about today, support and resistance. We're going to keep it simple. Get on any chart in any area, month to month. Use daily candles. You can use different time frames you want. Go back, use some weekly candles, or even like a 10-minute or 15-minute candle. You're going to see it a little closer, well, kind of a microscope. But practice this. Draw lines on a chart and just get crazy with it and see if you can identify a support and resistance level. And again, it's not an exact science. Hop Sauce, signing out. Enjoy the rest of your day, everybody. Hope you got something out of this. Give me that thumbs up and give me the sub if you would, please. I appreciate y'all. All right. Have a good week, people. We got stuff going on. Let's pay attention. Let's see if we can make some money this week. All right. Peace out. Peace out.